On today's episode, we are going to take a look at two streaming services that have lost almost 50% of their value in just a few days. Today's episode, we're going to take a look at what happened, why the big drop. We're also just going to do a quick overview on the business fundamental and see if it's time to buy. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream, taking a look at stocks you want me to look at. So let's get started. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done some crazy returns. If growing your money is something you'd like to do more of this year, you can visit thefool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now back to today's episode. All right, so those two stocks we're going to take a look at are Discovery Communication. This one is down about 47.86% from its all-time highs. And the second one we're going to take a look at is CBS Corporation, and this one is down about 53% from its all-time high at the moment. So now let's try to understand why this sell-off happened. And right now, the major article coming out is saying that the reason the stocks had to sell off is because there was a hedge fund that failed to meet some margin calls. And when you fail to meet some margin calls, you need to liquidize some positions to be able to meet those requirements. And that hedge fund ended up selling big blocks of Viacom and of Discovery to make sure they met that margin call. All right, so now that we understand what happens, let's take a closer look at both these companies to see if there's anything of interest to investors, and it should be something we should at least add to our watch list. So first, let's start off with Discovery Communication. This is traded under the NASDAQ as ticker DISCA. It's currently sitting at $40.52, and it has a market cap of about $18 billion. Like I mentioned, from its all-time highs, the stock is down about 48%. But from year to date, the stock is still up 32%. So investors are still very, very excited about Discovery. And I do believe the strong reason that the stock's price has done amazing to investors is because Discovery, and like we're going to see Viacom, they're really going super strong on this streaming services, video streaming services that a lot of other companies are doing. So Discovery has Discovery Plus, which they have a strong IP, a strong list of channels: HGTV, Food TV, TLC, ID, OWN, Animal Planet, and Discovery. So investors have been very, very excited about this and have been really believe the future growth of this company is now at early stages due to this type of platform. Now, if we take a closer look at fundamentals, analysts believe Discovery will grow on average 5.5% for the next 3 to 5 years. So we can see it's not a heavy growth company, but it is expected to grow its earnings as well. And it's already profitable, and it has positive in cash flow from operations. So it's not the fastest growing, but it's one that is already making money for investors. If we take a look at their balance sheet, remember, they are profitable and positive in cash flow from operations. So they have a nice amount of debt, but they also have some cash. And with being profitable, it allows them to continue to be form of leverage. All right, so the second stock we're going to take a look at is CBS Corporation. This is traded under the NASDAQ as ticker VIAC. It currently has a market cap of $28.7 billion. So it's a bit bigger than Discovery, like we looked at. This one actually also has a dividend yield of about 2% at current prices, which is pretty nice. Right now, from its all-time highs, the stock is down about 55.81%. But year to date, the stock is still up about 21%. Again, even with this big pullback, the stock is still positive for the year, and for similar reasons, right? CBS and Viacom, they've kind of are very strong in this overall streaming and are seeing growth there. They used to have CBS All Access, which has recently been rebranded to Paramount Plus, but they also have Showtime, and they have BET Plus and Pluto TV. Their overall streaming subscribers in their most recent quarter, which they presented to us in February 24th of 2021, showed that streaming subscribers were about 30 million global, and that was up 56% compared to the same time last year. Their Pluto TV's monthly active users were about 43 million, and that was up 80% compared to the same time last year. Viacom CBS has a lot of great networks from TV entertainments. They have all the CBS, all the sports. They have the cable networks like MTV, BET, Nickelodeon, Pop, TV Land, Showtime, Paramount, and so much more. And then they also have the film entertainment business. So this is one of the few that has a lot of, in my opinion, a lot of originals. And again, investors are very excited. Like I mentioned, CBS All Access has just recently been rebranded, and they have an ad version and a non-ad version at different prices. And we can see, like I mentioned, they have a lot of great originals. For example, Star Trek. They have Yellowstone. They have Avatar with Nickelodeon. They're thinking of Rugrats. Fairly Odd Parents. I mean, they have a lot of great shows. Halo, they have something working with Halo, the game. They have MTV Rules, a lot of reality shows that I believe in a lot of people watch. If we take a look at future growth, Viacom is expected to grow 3.6% on average. Again, another slow grower. It's growing a little bit slower than Discovery, and to me, I thought that was strange. For some reason, I thought Viacom has, based on the networks that they have and the platforms that they're hitting, I thought they would see a little stronger growth than that. The company is profitable and it is positive in cash flow from operations. Very similar to Discovery, balance sheet is strong, right? Like we saw, they had profitable earnings and they have positive cash flow from operations. So it doesn't really matter to me that they're kind of leveraged on debt. If you have income in your everyday life, like you, for example, if you're working right now, you most likely have some form of leverage on your mortgage, on a car payment. And just because that debt is higher than your income right now, as long as you have that positive cash flow, it allows you to pay those stuff. So very similar to a business, they have that positive income coming in, but they still are leveraged to some extent. All right, so now I want to take a look at the valuations of these companies at the moment. So right now we can see we're taking a look at Viacom and Discovery, but I wanted to compare them to some of their peers. So we have Comcast and we have AMC Networks, not AMC, the movie theaters. So right now I'm looking at yearly, quarterly growth, and we can see they're all pretty much non-existent in growers, and that's okay, right? I feel like these companies are meant for investors that want a profitable company, a company with a strong PE ratio, and maybe some form of dividends, and they kind of not worry too much about that growth. And this is the perfect example. At the same time, they're expanding into that whole streaming platform business, which might allow them to grow stronger, that revenue growth, or maybe those gross margins. If we take a look at gross profit margins, Discovery and Comcast are the highest right now in the 60% range. So that tells me two things. When I take a look at probably PE ratios, or maybe if I take a look at price to sales ratio, Discovery and Comcast are going to be the most expensive. The one with the lowest gross margins is Viacom CBS. So that tells me that's probably going to be the one with the lowest PE ratio or price to sales ratio. So right now, what I'm actually comparing them is the PE ratio. And I can see the one with the cheapest PE ratio is actually AMC. But Viacom is not that far behind. They're about 11.4 for Viacom and about 11.3 for AMC. Now, if we take a look at the two highest, they're Discovery and Comcast. And that makes sense, right? Those are the ones with the highest gross profit margins. Discovery right now has a PE ratio of about 22.69. And we have Comcast with about 23.86. So we can see both these companies were probably overextended with those current prices that they were at. And now with this pullback, they're kind of sitting really close to their peers. So their valuations is not as crazy anymore. We can see Discovery had a PE ratio of about 36 for some time. Now, if we take a look at forward PE ratio, this is where the story changes a bit. The highest PE ratio is Comcast, sitting at about 19.25. Then we have Discovery at about 14.35. Then we have Viacom at about 11.08. And then we have AMC Network at about 6.8. To my opinion, I think Discovery and Viacom are both looking very attractive. They're not sitting they're sitting right in between some of their competitors. And with the overall markets that they are expanding into, I believe investors should definitely keep an eye on these two at the moment. If I was to choose one, I think I might choose Viacom CBS, just because it is, even though it has the lowest gross margins, I personally am more excited about the products they have there. I feel like I'm more of a customer in that regard. I tend to watch sometimes some garbage TV, right? So Viacom is one of the few channels that I watch from time to time. All right, guys, so that's it for today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up. It helps so much with the channel, and I truly, truly appreciate it. And before we go, let me know in the comments, are you thinking of purchasing Discovery or Viacom anytime soon with the current drop in price? If so, let me know why. I'd love to hear your stories. So take care, guys. Have a good night and see you next time.